This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Morning, everybody. Welcome to the AgYield War Room. It's Friday, June 26th. I'm Ryland Texter, everyone's second favorite backup host. If you have any questions or comments, please feel free to drop them in the chat, and we'll get to them during the show. Start here outside markets. Looks like crude oil down 3% this morning, down about 250. Gold market up a little bit here. So we're seeing kind of a mixed bag in the outsides. Huge performance yesterday in grains. Just nice little technical reversal here in corn. So getting into some of that here, passing on over to Dustin, get your thoughts here this morning.
Yeah, thanks, Ryland. Yeah, we're, an important day for the markets. We still have July option expiration, and then we have, we're going into June 30th report next Tuesday, and that's also first notice day. We are seeing some more weakness in the spreads overnight. So July to Sep corn was down to 10 under, which is a new low. And a lot of, anything that's long on the cash market side is probably rolling right now. Markets being near contract lows, suggests that supply is adequate. But we also have seen some basis pushes as prices get low, and farmers have been slower to sell because of those lower prices. Now, when we go into this next couple of days, I think it's important to remember yesterday's rally was significant. It did cause a key reversal. So we made a new contract low for July Sep D's corns, and then we closed above the previous session's high. So they call that a key reversal, and it can be a technical signal of a market trying to bottom sometimes. I wouldn't necessarily say it's a given that has to bottom, but the timing is right? Going into option expiration, first notice day, a lot of things that still need to come about. Weather forecasts, we'll talk about that next too. But as we've mentioned the last couple of days, there have been, because of new contract lows, there have been a number of puts that have gone in the money. And the cleanup of those options still hasn't really been that extensive. So we still have a lot of in the money puts that will go off today for July expiration. And the question is, what do they do with that? Is that a position that's going to already close off longs? How does open interest change for July going into Monday? So there could be some fireworks, and that may have also helped some of that strength that we saw yesterday as some of those options start to move out of the money. There's a natural buy-in that happens as you see, whoever's holding those long side of the options sell. That may cause slight rebounds in the market too. So I'm cautiously optimistic. That's the kind of rebound you want to see. You want to see a key reversal. You want to see support that's quick. When I look out to that 3 and 4 week forecast, I know these are lower confidence forecasts. That heat and dryness that's coming in after such a wet June is probably the last thing the crop is going to want to see if that does materialize. So I can't help but think that may be part of why we also saw the action yesterday, is that that if there is, with all of the extra contracts that have been added, especially all the fresh speculative shorts that have been added by managed money in recent weeks, if for some reason the forecast does start to turn a bit dry after being wet in June, that's the last thing that yield's going to want to see. And the closer we get to that, if that heat and dryness is staying in that week 3, week 4, as we get closer to it, that would be an interesting time to see how the spec funds perform. So here's the hope, and we'll see what we get here prior to the report. And we'll talk more about the report too on Monday, as we look at all those average guesses. But that is usually a big report. I'm a little skeptical about what you're going to see when you look at the numbers. If the participation rates, down below 40% again, and they're off by 3.8 or 3.6 million acres last year, how much trust does the market have of this survey-based report with low participation rates? The big acreage numbers and the just the big data that we'd really trust is going to probably come from FSA certified acres in August. And that did change things quite a bit last year once we got that data. So, but still probably arguably over history, first or second most important report of the year would be June 30th. So there's going to probably be a lot of market attention to that report, even if we think that some of the data may be flawed from, the way that it's going to be partaken.
Yeah, well, we were talking before the show. Ben, what are your thoughts on the stocks and acreage report? I mean, we were talking about the acreage in general. I mean, I know Dustin has been talking about the lack of confidence from the low participation, but just in general, like when markets digest these things, you were kind of stating that you had heard that maybe we actually lose some corn acres, maybe to a little bit larger degree. I mean, do you think there's some credibility to that? What are your thoughts?
I think that the signs, the things that were happening during the planning window and before would suggest that. When you factor in the Delta, probably a lot of rice and cotton acres were lost. And I think that they would naturally kind of go to soybeans. The cost of planting corn and the ratio where it was trading during that period. So, my gut kind of says I think we'll lose a little bit of corn acres eventually. Interesting. People have some pretty strong opinions on this. I was Bloomberg or someone put out yesterday 97 million acres of corn. I suppose that's possible. I would expect, though, because of just recency bias, that the USDA will not make major changes just yet. I think it will be a slow roll, almost the same as last year, where they start moving it slowly. And I think that that's probably because they know they're working with a fairly incomplete data set. So, the stocks number for corn will look bearish. I don't think it's going to be a big surprise because people will quote it versus last year. We know there's more corn. And I think once you get past that, it's about weather. First week or two, it's, the warmth is probably pretty welcome. And if it sticks around and we don't see maps starting getting cooler and wetter, I think people are going to have to take notice. But that weather markets is, you can age you quickly waiting for something like that to happen. And, it's been a while, so you never know. I think the technical action, the last day or two of getting below some major trend lines, complete washout. We separated people from a lot of their old crop. I'm pretty interested to see what that weather looks like. The last 2 weeks of July, first 4 weeks of August, or the month of August, and go from there. And we're starting from a pretty beat up place. So we'll see. I'm open to the possibilities here. Get through today and get through the report on Tuesday, and it will be 100% all eyes on weather at that point.
Right. It does kind of seem like we're coming into this big transitional time frame, right? Tuesday is the end of the month, the end of the quarter, the stocks and acreage report. We got July option expiration today. It feels like, especially just looking at the daily bulletin here, there really wasn't a big change in corn open interest. So it feels like we got this big technical move on maybe some fundamental news out of the Strait of Hormuz. I mean, where do you think can we keep this going? I mean, overnight markets are a little bit lower. We got corn down 2, beans down 6, wheat down 11. I mean, as far as that goes, it doesn't seem like we're getting a whole lot of follow through. Where could potentially we get up to, especially something like corn? I mean, Jason and I were talking yesterday. We were looking at like the 25-day, 50-day kind of moving average. I mean, you guys think that we could possibly test those if we get some follow through here?
I do.
I do too.
Go ahead, Ben.
I'm just going to say, like, we got so beat up, and we have a couple things that are compelling on the chart as a flag pattern. We haven't touched the 20-day in a long time. That would be kind of your first breach. So yeah, I wouldn't rule anything out. I don't think we're going into the report on our recent lows. So, somewhere between here and 25 in the July, I would think is where we start out at for the report. But
yeah, I do too. I think markets are the great calculator, and there's really not like a private function to really accurately get acres and stocks out there, other than the calculation of the market and listening to the signals it's providing through watching basis and spreads. But one of the arguments, I've always been a staunch USDA defender on these reports up until about the January 2021 report. In that report, they revised the September 2020 stocks carryout lower, and that was largely I think they related it to feed demand, which is we thought was not probably one of the worst numbers that they have. But it goes all the way back to that 2019 prevent plant acreage number and potentially lower crop size that they're having to try to reconcile. And it led right into one of the biggest rallies we've ever seen, right? And of course, there's a lot of things that happened during that time. Duratio, Chinese buying started, and you had the stocks revision, and all of a sudden the market goes from in the lower threes into the upper sevens within a 6-month period. So there is obviously new information that comes to the market that completely changes the situation, and the market may not be able to fully grasp something like stocks and acreage until you get like an entity like the USDA to come in, because that's always been the case. There's been no private solution outside of the USDA because they filled that role. If all of a sudden that data is starting to get worse and worse, and the participation rates have been going down for the last decade on these surveys, and I think, and I had a farmer tell me yesterday, it's like, it makes sense. Why would they partake, right? It feels like a lot of the data is kind of used against them, was his words. And then I can get that feeling, really, like if you're getting into a series of bear markets because it's all bearish data, and why provide it? But my point on this whole thing is that you could see the situation where I think natural rotation, when we had really good data last year from FSA acres showing the most number of corn acres since the 1936, why wouldn't that naturally rotate back out of corn and into something like beans? Right now, we all perceive that we're 95 or greater on acreage because of the most recent survey, which, again, flawed methodology, 37% participation rate. If the market is getting good data, like export sales, really good data, ethanol production, really good data, and we have demand showing that it's really quite strong. So you have a record demand market coming into an unknown acreage change, and we know that end users can make money at this price on corn. This is where it does feel a little bit 2020-ish. I'm not saying corn's going to go sharply higher. I just think that there might be not a very good price discovery. And if you look at the participants that caused, this 50-cent drop in June that was so quick, a lot of it's been speculative selling. It hasn't necessarily been, I know there's a bunch of farmer selling and things that are happening there, but like the real volume change of net positions was fresh spec shorts during that time frame. And that changes the headlines, is right. Everyone starts to try to paint the picture of why we have a bearish market, and they highlight all the things that could be bearish to justify it, us included, right? We're trying to figure out what that is, but it could come down to like, well, it's just poor price discovery too. The verdict will be out once we actually get through another 6 months and see what production was and see what demand was in that time frame. But I do think there's a bit of volatility here that could be coming if we're way off on some of these numbers like acreage as we get through the next 90 days and find that out.
Good stuff. Well, thanks for that, Dustin. On the livestock side of things, obviously, cattle market just kind of waiting for cash to develop here. We've seen 260 trades so far, 255 bids posted yesterday in the South, but no takers at this point. So, beef market's also starting to falter here. So I think there's a little bit of concern here overall, just about how cash is really going to shape up this week, and if we are going to see this 260 trade kind of stick. So I think that's the expectation right now, and there's a lot kind of yet to be seen. So we'll see how that shapes up today. And obviously yesterday, hog and pig report came out. Market reaction was a little bit on the neutral side. All hog and pigs came in at 73.664 million head, just below trade estimates. Heifer breeding number, as usual, still just below trade estimates, 98.8, and marketing's at 100.1, just slightly below expectations. So overall, we've got a pretty similar supply to last year. There wasn't a really big standout in this report. I mean, obviously, the market's just getting beaten up here, left and right. We're still carving out new lows here, and these trends seem to continue. No real expansion in breeding herds, still record number of pigs per litter. So it just seems like more of the same. There really wasn't anything to grasp. I think maybe you could get a little support in the back end of the market, just maybe from some of those lower than expected farrowings on the report. But overall, we've got a pretty similar supply here, and I don't think you're really going to shake anything up with this report. Also, cash market's still lower here at 95.29, down 27, and bellies finally finding some support, but we'll see if the market actually buys that. They're up about 474 yesterday. So with that, that'll finish up my segment here, but it is time for the Fun Fact Friday. It is finally here, Brian. What you got?
Thanks, Ryland. Happy Friday, everybody. We made it. Since we're going to be starting the celebration of 250 years of freedom next Saturday, we're closed next Friday, so I thought we'd start to kick it off with celebrating freedom with competitive eating. Nothing says, as Ryland said yesterday, we're entering hot dog season. So I said, hey, nothing says celebrating 250 years of freedom than hot dog eating contest. So let's see how many hot dogs you can shove in your mouth in 10 minutes. So it all began in the 70s with Morty Matz did it as a publicity stunt to get more Nathan hot dogs sold. Joey Jaws Chestnut is the undisputed king, 17 titles of the coveted mustard belt. His all-time record is 76 hot dogs and buns in 10 minutes. To put that in perspective, 76 hot dogs equals 17 pounds of food, which is equivalent to 12,000 calories, which equals basically 4 Thanksgiving dinners. So that's a lot of food to take in. Another comparison is in the weight totals, it equals 42 billiard balls.
Oh.
Oh yeah, right? Put those down your gullet.
I measure everything.
Yeah. If you add up all the contests since it started, it would total 330 pounds of hot dogs.
Wow.
If you laid them end to end, it would circle a baseball diamond more than twice. Eaters train their stomachs to stretch by drinking gallons of milk or massive amounts of watermelon and oatmeal. Yeah. The jiggling and jumping on stage during the contest is not a victory dance. It's a settling technique to help the dogs slide down and pack tighter in the stomach. Ryland's fan, the Japanese star Kobayashi, got banned in 2010 for contract disputes. He tried to crash the stage, got arrested, and quipped, "I hope they have hot dogs in jail." All Spare fans, in 2003, William the Fridge Perry got entered into the contest and only managed to eat 4 hot dogs when he tapped out after 5 minutes. So competitive eating is an art, and it began actually in the 17th century when Nicholas Wood, the great eater of Kent in England, in 1630, his feats included, this is all in one sitting, eating a whole sheep, minus the wool, the horns, and the bones.
Sure.
Dozens of rabbits, and nearly 400 pigeons.
Oh, God.
Yeah, he then fell into an 8-hour coma.
Yeah, well, I mean, if you're eating pigeons, goats, I mean, it's bound to happen. Probably can't be good for you.
Yeah, so have a great start to the holiday week, everybody. Enjoy a hot dog responsibly. And I think we have a picture of the contests that are entering into Nathan's this year.
Oh, my God. I didn't think you put any pigeons in there, though. I mean, come on now.
No, just hot dogs.
Well, that's great. Well, thank you for that, Brian. Well, we'll wrap that up here for the week. And if you enjoy War Room as much as we do, smash that like button. Don't forget to subscribe. Also, check out the War Room report here. It does help the show out quite a bit. You can get access to our premium content. We are streaming every day live that the markets are open on X, Facebook, and YouTube. And we appreciate all the support. So once again, don't forget to smash that like button. And we'll see all y'all next week. Thanks.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.